It's very good. It's extremely well organised, and lots of communications over the last month or three. I think it's very impressive. I was talking about whether banks could be reformed, and I was saying yes, they can be reformed without massive surgery, but that there's still a lot of heavy lifting to be done before we're at a safe and secure place. I don't really actually. I think the lack of aggressive regulation has been problematic, but the nature of the banking market, particularly in the US, has changed dramatically over the last 80 years, such that now the capital markets account for about 3/4 of all corporate lending in the United States. It's one of the United States' comparative advantages. It gives it a much bigger and more liquid pool of finance than we have here in Europe. And the role of the capital markets is such that a world of Glass-Steagall, I think, is no longer as relevant as it was in the early 1930s. Two or three things are at play here. One is the political cycle, which is that MEPs have got other things on their mind right now, which is an election that's coming up shortly. And this winter, the whole of the Commission changes. So there's the drive for leadership in this thing looks pretty fragile. And the second thing that has changed is that there's nothing like a real burning crisis to persuade people to make radical change. But since the spring of last year, when the real heat came off the Eurozone banking crisis, the pressure for radical reform has eased off, which might be a bad thing. It might be better if things had got done earlier than they now have been. But there doesn't seem right now to be a political momentum for the sort of changes you're describing. Because at the time of the financial crisis, a lot of these very big institutions, over 95% of their balance sheets were financed by debt, which meant that their assets only had to decline in value by a trivial sum for them to be wiped out, and they were. So that, and they shaped their business models, these institutions, on targets for return on equity, which required, if they were to be met, very, very risky and very high levels of leverage. Holding more equity capital gives you a cushion for bad times. It may have more to do with sort of political headline grabbing than with real change. I mean, the fact is that criminal prosecutions are very, very difficult to deliver, and that we have seen we've seen the biggest banking and financial catastrophe for 100 years in this country, and we have seen the courts, the criminal courts, have played almost no part at all in the follow through. It's very, very difficult to prove a criminal offence of this kind, and it's especially, as you say, if the reckless banker has been supported by a board of the great and good on his pathway to perdition. No, I don't think you should make it easier to prosecute criminals. I think I think the law, the rule of the law, is really important. But what I think is more practical and more likely to have an impact is the new supervisory regime, which is going to make senior managers be much more closely scrutinised by the regulators than they have been in the past. There's going to be really two cadres of senior people. There'll be senior managers, and the regulator will want to know what they've had for breakfast. And then there will be certificated persons who won't be subject to such close scrutiny, but will have to be shown to have integrity and proper qualifications. Well, I think that a number of them have yet to recognise either the scale of the financial disaster which occurred in 2007. People make parallels with Japan, where the Japanese banks in the 90s didn't write off their bad property loans, and they and the Japanese economy were in a kind of zombie state for a decade. That's one set of worries. Another set of worries is that although the bank leadership has changed to reflect a new and more regulated world, there's still a lot of bankers who've been brought up, whose whole careers have been spent in an environment where massive bonuses and risky behaviour was the norm. It's going to take a bit of time to change all that. And we're still also in a world of very, very low interest rates. If that were for any reason to change, there would be a grinding noises coming out of the banking system, especially in Europe. I think we can't even contemplate either of those eventualities. We just have to make sure that the structure is such that banks don't fail.